You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, a program where we break down all the action on the futures options side of the fence. Maybe you're going to talk some ag, some energy, some metals, some equities. You never know what the heck is going to make it on the show. That's why you got to tune in every week, break it all down here for you, kicking it off with the movers and shakers, what's lighting it up over there at CME Group. Reminding you out there, if you like what you hear, this show, anything else we do on the network, it's a whole bunch of stuff hitting you these days on the network. Keep rating and reviewing it wherever you get this content. It really does help new folks discover the network these days. You can argue it's more important than ever in these troubled times to have a reliable source of information on these markets. We like to think we provide that. We've been doing it for quite some time, kind of the OGs in the options podcasting world. So give a review, have new folks continue to discover the content. Keep those questions and comments coming in too. Maybe you have a product you want to hear analyzed on the show. You just have a question, hit us up, let us know. We do love to hear from all of you guys and gals out there. And let's see who we're hearing from on the program today. First, joining me from the FTSE Russell Studios, once again, our old friend, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to TWIFO, sir.
Hey, Mark. It's great to be here. Great to be on the show. I'm looking forward to having a fantastic discussion today.
Should be a fun one today. Should be a hot one, because back by popular request, mostly because you missed him last time, Sean, we brought him back just for you. Once again, our old friend holding down the CME Group hot seat, the once and future Dr. Bix, a.k.a. Mr. Russell Rhoads, a.k.a. the author of one or two or half a dozen options and volatility-oriented tomes by way of Loyola, by way of EQ Derivatives. Mr. Rhoads, welcome back to TWIFO, sir. It has been too long.
Thank you for having me. I played catch up on all of your programs as I drove down to Indianapolis to be disappointed by those Ramblers.
Oh, you went there in person, huh?
Yeah. Oh, I did. First time I'd gone more than 20 miles from my house in a year.
You hung out with Sister Jean?
I've got a selfie somewhere with Sister Jean. They weren't letting anybody near her at the game, though. But Sean, I got a scarf for one of your kids. I got to drop it off at your house.
Oh, that's right.
Yeah,
you know where I live.
I
a couple of golf shots away.
I kind of know where you live, but but just for full disclosure, we're one suburb in Chicago over from each other, although we've never met up out here, and that's more my fault than Sean's fault.
Haunted burger place like in between us on 55th Street. We could always rendezvous there.
I'm happy to do that.
There you go. Exchanging scarves and burgers as we head on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, let's do it. Let's dive into the Movers and Shakers. See what is moving and shaking over there at CME this week. They trade a whole bunch of stuff. Let's see what's moving. Let's go out to our CME hot seat again. I'll allow you to choose, Mr. Rhodes. Where should we begin our journey this week? To the light side, a.k.a. the upside, or to the dark side, sir?
Well, just because I'm still smarting from the drubbing that we took from Oregon State, I'm going to the dark side.
I wouldn't keep bringing it up because our producer here is a U of I fan. And Loyola took them out. So if you keep talking about Loyola, she may accidentally hit the hang up button on you. So just be forewarned there.
And I know she has a lot of control. She's kind of the gatekeeper as to whether or not I'm on ever.
She
again.
Does control. So maybe you want to throw some love towards U of I.
Now.
All right. What'd you say? Dark side? Is that what you said?
I said dark side. Yeah.
All right. I'm just giving you some warning for your own protection, sir, as we keep on rolling. She's a vengeful producer. Let's go to the dark side. The dark side itself pretty vengeful this week. Let's see what we got lighting it up. Even though, interestingly enough, we talk about this report being biased in one direction or the other, usually week on week. It's very rare these days that we get an equilateral, equidistant 50-50 pretty much upside and dark side. And that is once again not the case this week, as we see predominantly upside on the screen. Is you can put together a bottom five, but not much beyond that, listeners. Let's get on out there now to the dark side. Number 5 in the red direction, silver off almost 1.3%. It was number 3 to the dark side last week. And if you're wondering, it does decent paper, about 26,000 contracts on the tape so far this week. So we could certainly hang our hats out there this week. Number 4, euro dollars off about 1.4%. You don't need me to tell you how much paper goes up in euro dollars. Spoiler, it's a lot. Number 3, got the old yen USD in the dark side. That's interesting. I haven't seen them in the movers and shakers. You don't see FX in the movers and shakers very often at all. It's off about 1.43%. Doing some paper this week, about 31,000 contracts on the tape. So we could hang our hat out there in yen USD as well. Number 2, iron ore off a little over 2%, about 2.02%. And before you ask, there are 0 contracts on the tape in iron ore so far this week. So no joy for iron ore fans on the show yet again. I apologize. It's not my fault, but hey, I wish we could bring you the iron ore analysis you deeply crave. And number 1 to the dark side this week, soybean oil. Taking a bit of a drubbing, off 5.26%. It was number 4 in the other direction last week, and it does some paper. We've broken it down on the show before. It's about 50,000 contracts on the tape right now. So there is some action out there in soybean oil. Should we decide to head in that direction? To the light side, let's go. Before we go out to the top 5, let's extend it a little bit because there's so much green on the screen this week. Got to go to number 10 to find the Russell 2000 this week, up 2.7%. Usually that'd be enough to get yourself firmly ensconced in the top 5. This week, not so much. A lot of green on the screen. And it was also number 2 in the other direction last week out there. And let's see the actual top 5 now. Lumber. Once again, lumber. Moving and shaking, up 4.12%. It was number 1 in the same direction last week. But before you ask, 139 contracts. So not a lot to parse there. Number 4, platinum, up almost 5%, 4.99%, and doing a whopping 61 contracts so far this week. So unfortunately, not a lot to hang our hats in out there as well. Number 3, Feeder cattle up 5.89%. Good week for the feeder cattle. Also actually doing a little bit of paper, about 5,000 contracts on the tape. So feeder cattle starting to become a bit of an options player out there. Number 2, Class 3 milk up 8.52%. So good week in the dairy and cattle range out there. And it's doing about 2,500 contracts. So getting more paper on the tape these days out there in Class 3 milk, but still struggling to catch up even to feeder cattle out there. And number 1, the big dog, you can probably guess it's Bitcoin. It was getting drubbed last week, so rebounding this week, up nearly 15%, 14.87%. It was number 1 in the other direction last week, and a whopping 122 contracts on the tape this week, even though that may be changing soon with some of the addition of some minis and indeed some micros coming up out there. Before we get to that, let's also break down the movers and shakers from a vol perspective out there. Again, you can run all these for yourselves if you have the premium version of the tools. Go into the scans. You can go to the constant maturity volatility, and that'll get you for the movers and shakers for the week. On the declining vol side, it's kind of all Eurodollars. Eurodollar 9-month mid-curve June vol off 25%. So getting drubbed. The 6-month mid-curve June vol in Eurodollar off 17%, and the 9-month mid-curve May off a whopping 16%. So vol coming in, to put it mildly, out there. On the Eurodollar curve, on the advancing side, not a lot of vol advancing. You had to struggle to find anything north of 1%. That gets you to soybean oil, the June contract, up nearly 2%, 1.75%. The lean hogs June contract up about 1%, and everything else is well below 1% out there. So some interesting stuff to parse, but because we got Mr. RHOADS, because Sean's hot and heavy, and because there's some things lighting up out there right now, we got to get into a little bit of the old equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, let's do it. Let's break down some equities. You know, if we're talking equities, we got to talk the other side of that coin, which is volatility. Coming into showtime, there's a lot of green on the equity screen, which means a lot of red on the vol screen. Coming into showtime, we had RVX once again shy of the 30 handle. It seemed like it could never break through the 30 handle to the dark side. Well, it did again this week. It was at almost 28.5 coming into the start of the show. Puts it down nearly 5 points, about 4.8 points from where it was on our show last week. VIX also seeing a handle it hasn't seen in quite some time. It was at an 18 handle, 18.10 coming at showtime. It flirted briefly with a 17 handle today, listeners. We haven't seen that since the start of all this madness. So it's been a while since we've seen a 17 handle in the VIX. We saw it ever so briefly today. That puts it down about almost 3 points, 2.95 from our last show. VVIX, the vol of vol, also an interesting metric to watch these days because it's below triple digits. It's at 96.81 coming into showtime. Puts it down over 10 handles, almost 11 from where it was this time last show. It's been glued above 120 for almost the entirety of this pandemic era. So interesting things afoot from a vol perspective. And vol Q, aka the at the money vol of the NASDAQ 100 at about exactly at 21, puts it down about 5.25 points from last show. So that puts that VIX to RVX, aka that small cap to large cap vol spread, right about 10.3 or so. That's almost a point tighter, about 3/4, a little bit more, about 0.85 points tighter than it was this time last show. So that spread coming in a little bit, it was crazy wide on the show last week, listeners. So it's got to come in a little bit, came in a little bit this week. And the VIX to vol Q, so the S&P to NASDAQ vol spread, almost 3 points, about 2.9. That's about 2.25 points tighter. So interesting movement on both of those fronts. Since we have you in the hot seat this week, Mr. RHOADS, we'll start with you. I know you've been watching. We got to get to it first. Freaking VIX with a 17 handle, sir. We haven't seen that in quite some time. What say you about that once in future, Dr. VIX?
We actually got a cool signal earlier this week when VIX was up a little bit, I think Tuesday morning, and the futures, the whole futures curve was down slightly. And it was the first time that you could really see the vol traders not biting when VIX started moving up. And we always say Monday morning quarterbacking is very, very easy unless you're a Chicago Bear. And basically, it looking back, it was kind of a signal that maybe it's time for VIX to go to the teens and stay in the teens.
So you're buying this. This is a new vol regime to you, sir. We're hanging out here for a while.
I I did I actually did a presentation for a conference about 3 or 4 days ago, and I played economist. I argued both sides of it. But this break below 18 or so makes me. I'll say I'm gonna say I'm 60% on the regime is going back to lower volatility bandwagon. I wasn't 4 or 5 days ago, but I'm kind of going in that direction now, just reacting to price action, which is what you're supposed to do, and admitting if you're kind of wrong. And I was kind of wrong.
S&P also breaking through the 4,000 level to the north today, so that's another key level a lot of folks have been looking for some time, and seemingly being able to maintain it, at least for most of the day here today. So these are key levels we're watching. I know, speaking of key levels, I know, Russell, you were kind of inspired by some key levels we were talking about on the show recently about the upside call skew and the action out there in the small cap land, aka Russell 2000, perhaps inspired to create some videos along that same type of topic, sir. What's been catching your eye in the land of small cap call skew since your last appearance, sir?
Well, as I mentioned, and I wasn't joking, I was playing catch up on podcasts when I drove down to Indianapolis. And I know Sean had been saying for some time that the reason behind RVX being elevated relative to VIX and the average spread between the two, if you just take RVX over VIX, it's around 26% going back over all time history that we have data on that. I think last Friday or Monday it closed at 50%, and in fact, right now it's pretty close to 50%. The biggest spread is right at 66%. But what Sean had been saying was that we're seeing this being driven somewhat by the call side on the Russell 2000 and the Russell 2000 complex, and I was like, note to self. Let's verify. Let's pull the old Reagan-Gorbachev thing. I'm playing Reagan. Sean, you're playing Gorbachev. And I am trusting but verifying. And so I ran some skew numbers, and turns out that the 5% out of the money call over 5% out of the money put skew has been elevated in the Russell complex, kind of at a bit of a higher level. And it's been drifting lower over the past couple of months in the S&P 500 complex. So Sean was dead on that demand for them calls, which is not what normally drives a volatility index, has been what has allowed RUT volatility to remain elevated. And then I started just kind of going through block trades, and looks like a lot of traders might be trying to take advantage of that, selling out of the money call spreads since the options are expensive relative to history.
Well, Mr. Sean, you have been invoked. You have been unflatteringly compared to Gorbachev. I don't recall you having that mark on your forehead. Perhaps I missed it last time. But A, what do you have to say to that? And B, what do you have to say about you're being proven right? The call's driving up the RVX, sir.
Well, Gorbachev and Reagan, I think they kind of helped bring the walls down between us, the U.S. and the Russians. I think that was probably one of the closest U.S. and Russia has gotten in many generations. I'm going to kind of take I'm the light side, so I always take the upside. I'm going to feel a compliment in the conversation rather than an insult. But I definitely don't have that birthmark on my forehead. There's no question. And I still have some really nice hair up there too. So I'm blessing myself as I say that. But back to the call, and thanks for the shout out on your show, your EQ show, Russell. And it's really nice to have some of this information validated, because it has been the case. Vol comes in rallies, but Vol stayed bids. Vol stayed high in this rally, and usually as skew and upside calls are being sold in rallies. But in this case, the performance of small caps has just really outperformed the entire index benchmark universe. And we actually have Russell performance numbers for Q1 that just actually came out today. I can send them to you guys after the show, but large caps, the Russell 1000 up 5.9% for the first quarter. Small caps up 12.7% for the first quarter. So there's these momentum kind of things that are behind the U.S. domestic index. COVID optimism, with the vaccine being accelerated, fiscal stimulation here in the U.S. Has bode well. Healthcare stocks, one of those larger weighted sectors within small caps has done well. So there's lots of areas why I think people, and I have to say that people are watching these sectors really in a big way, making them understand more what's driving our small cap index, the Russell 2000. So it's really interesting to see. Vol has come in. I'm not surprised because the market continues to show strength. So it's great to see. It's also great to see our exchanges being able to give their customers a great experience with the fantastic liquidity you can get in the RUT complex and now the mini RUT complex over at Cboe with the mini Russell options that were launched a couple of weeks ago. So lots of opportunity to trade, hedge, take a stand, make a statement in small caps with our partners at Cboe Global and CME Group. I don't know, Russell, did you want to talk about mini RUT and the product launch or?
Oh, absolutely. I mean, we've been seeing some decent volume in that space, and you mentioned the twice weekly videos I do on for EQ derivatives. There've been some sizable trades, some interesting trades that have already been done in that complex. I also like that. In addition, we've now got the Monday, Wednesday, Friday expirations, which I love pinpointing. Right. Outlooks, and I love trading. There are people in our business that made a career out of working 1 week out of the month back when we only had expiration once a month. And a lot of those strategies continue to hold up even when we have expirations 2-3 times a week, or sometimes 4 times a week if you've got the month end options as well. So there's huge opportunities. The size of, just because of the growth of all of the broad-based indexes, I think the size was starting to price some of the smaller traders out. And it's wonderful that you can take advantage of the index option advantages that you have there. I love cash settlement. I don't have to worry if I'm going to get settled in the money and suddenly have a position in an ETF. And I like the multiple expirations as well. So I think it's a great step in the right direction. And sometimes things launch and there's no volume at all. They're doing really good volume in the mini right off the bat.
Let's check out some of this volume going up right now over here at CME. Here we got, let's see, I'd come into Showtime Russell 2000 at almost 22.40, up about 1.25% this week. Obviously up more than that since our show last week. In terms of where the action is, it is once again on the contract that has seconds to go. So it's all short-dated paper here in the Russell 2000. Let's go a little bit farther out with about 29% of the paper going the way of the dodo in a few minutes. Let's go a little bit farther out to find another active month. Let's go out to June, actually, about 22% of the paper going up out there. Let's break down some of the action out there. If you're wondering, the June vol at about a 24, almost 24.5, it's off about almost exactly 2 points this week. So obviously vol coming in a little bit farther out in the curve, which again, we just talked about the vol annihilation that's going on out there. So you can be surprised it's only 2 points, but that's what we're seeing out there. Skew-wise, we're seeing the puts last week, 17.4% rich. The at-the-money this week, about the same, 17.3% rich. The calls, 11.7% cheap this week, about 11% cheap. So the calls a little bit less cheap, and the puts about the same as we have moved quite a bit up the curve and down the vol spectrum there. Let's see what the most active contract. Everyone's asking, are there still upside calls lighting it up? And that's the case again this week. 24 halves out there in June are where the action is yet again, kind of trading it up out here all week. So these, again, 200 points out of the money calls lighting it up in June. So folks asking, are there still small delta calls going up out here in Russell 2000? The answer is affirmative. Yes, that is indeed the case. There's a lot of equity action on the tape. We could probably spend the rest of the show talking about it, but we got to hang our hat in some other product categories as well. Mr. Rhodes, as our guest, where should we journey to next? Is something on our movers and shakers catching your eye, or perhaps you want to go off the menu, sir?
How about, can we go to the energy space?
I think we can do that. Ask and you shall receive a little bit of the old energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, interesting stuff. Actually, one of the few rare weeks where energy isn't dominating our movers and shakers, and you don't even see nat gas on there, which is rare. Usually nat gas is lighting something up out there, WTI, all that fun out there in the energy sector. Mr. Rhodes, what's been catching your eye out there in energy land of late, sir?
Well, you noted that we get notes ahead of time. So just the thing that's happened with the Brent curve moving into backwardation, I thought that was kind of interesting and something we haven't seen since pre-pandemic times. So, and I don't know if that's, if that's a result of somebody trying to U-turn in the Suez Canal and it didn't go particularly well or what. But I guess that's, it'll be interesting to see if that's going to revert back to some sort of normalcy now that boats are moving or not.
Yeah, I kind of wonder myself how much of that had to do with the log jam there in the Suez Canal, right? Which was just an absurd thing to watch. And the longer it took to get it out of there, the more you had to wonder what the hell is going on there. But you're right. We did see the Brent futures move into pretty deep backwardation. And again, as you mentioned, the first time since January of 2020. Remember that time? January of 2020, pre-pandemic, pre-invasion of the Capitol, all these things that have happened since then. It was all just a distant pipe dream. The most we had to worry about in January of 2020 was a little bit of an assassination of an Iranian general there. That was what everyone was up in arms about. And that could, of course, cause a little bit of backwardation in the futures as well. But outside of that, it's just been a fascinating time out here. Let's get out into the crude oil, into a lot of the area you folks like to look at. Not as much options activity in Brent, and a lot of you like to trade WTI. So we'll head on out there to WTI out there. Mr. Rhodes, has WTI been coming across your derivatives research over there at EQ these days, sir?
Well, I've been keeping a close eye on it more than anything else because I feel like 2021 is the year that I'm finally right and we experience some inflation. And that's one of the markets that I think will give you an early signal. What's been going, lumber is not one of our macro choices, but the price of lumber going up as well is something that I think is going to start working its way through, to other areas of the economy. You can't really build anything without lumber. You also, your toilet paper is going to become much more expensive. So I think maybe we should be investing in bidets.
Yes, there we go. That's the hot tips coming out of TWIFO. Go long bidets, listeners. Big money in those bidets out there. They are certainly pricey if you got some of the better ones out there. So maybe there is some cash in them thar hills. Let's see what's lighting it up out here from a Texas tea perspective right now. Coming into showtime here, we saw WTI still maintaining it north of the 60 handle, 61.35 coming into showtime. Puts it up about a third of a point, about 0.6% out here. So not that big of a move underlying wise, really out here. Everyone was kind of watching that Suez drama for better or for worse. Just amazed at how long it took them to unstick the canal. But coming into showtime, we've got decent amount of paper, a little over 500,000 contracts, about 510,000 contracts on the tape out there in WTI right now. Of that, about 40, almost 41% in that May contract that is going out in about exactly 2 weeks. So it's right at the cusp of where we like to analyze things like vol and skew. By the way, if you're wondering, the vol out there in that May contract, almost a 40, about a 38. It's come in about 6, almost 7 points since our last show. So vol coming in quite a bit. We saw a little bit of buildup of vol probably as a result of all that log jam over there. Now that that's finally been unstuck, get a little bit of that vol coming in. So a lot of vol coming in. Again, we said it before, we'll say it again. Crude oil, much more of a volatility-oriented product than a lot of people assume when they first start trading. They always think equities and when it comes to volatility, but crude has its own interesting vol life out there and vol trading setups, and it's certainly fascinating to watch every week. And coming in nearly 7 points yet again. So vol moving and shaking out there. In terms of skew, the puts last week, 13.7% rich to the at the money coming in this week, 11.3%. Of course, some of that could be just this vol implosion we're seeing out there. The calls staying roughly unched this week. So 8.8% cheap last week, 8.9% cheap this week. So actually a little bit cheaper, which is interesting. With the vol getting annihilated, the calls staying kind of firm. So maybe a little bit of a support action on the call wing. Let's see what the most active trade was out here this week. Looks like it was the double puts in this April contract that's going away in exactly 2 weeks, doing about 18,500 contracts this week. The big day actually today, 9,000 on the tape today, 6,000 on Tuesday, about 2,000 on Wednesday, and about 1,000 on Monday. So obviously most of that paper throughout the week has been opening. We have no idea what today's paper was because it just went up today, but from an opening perspective, but a lot of paper on these double puts, which is kind of interesting. And then right behind it, we've got kind of a bit of a tie for number 2 with the 56 puts, also in April, doing about 17,000 again. A ton of paper today, 11,000 on the tape. So maybe some tight verticals going up out here. It is weird, the 55 and 56 puts both doing so much paper. And then right behind it, we have the double puts also out there in June doing 16,850. So about 50 contracts shy of the 56 puts in April. These, again, let's see what went up out there throughout the week. Let's see if today is the hot day out there in June as well. Yes, today is the day for downside puts in WTI, listeners. About 8,000 almost on the tape today. In the June doubles, 3,600 yesterday, 5,000 on Tuesday, slightly closing on Tuesday. So taking some of these double puts off on Tuesday, but maybe putting some more on out there today. If you wanted a little bit of upside in your mix, listeners, you got some to the tune of actually the 70 calls are right behind these, going out to D70s doing 16,300 contracts as well. So a lot of hot and heavy action, double puts, 56 puts, and then right behind it, the 70 calls in December. So action kind of across the board. 70 calls also pretty active here in, these are SEP 70s doing about 10,000 as well. So yeah, a lot of action on the 70 strike and on double puts kind of across the board here today, which is kind of fascinating. Interesting stuff here as well. Mr. Rhodes, I know before we roll off energy, I know you like to watch the skew out here in energy. For a long time, doesn't seem like it was that long ago on the show, but for a long time on the show, we were wondering and hemming and hawing, could it maintain a bid north of 40? The skew kept saying no. We finally broke through it. Now we're at the 60 level. What are your thoughts on all things skew out there, sir?
Skew-wise, it's telling us that we are at the high end of the range. Now, you just said we were at the high end of the range as well. So maybe skew-wise, it's confirming it somewhat. But, you know, and I think Sean probably has a little bit of a thought on this as well. They did, you know, the price of oil did go up on the blockage. And, it, you know, that put activity seems like maybe people are playing we're hoping for some downside afterwards, and they haven't gotten it yet.
Definitely. I saw that. You always watch when there's a big event somewhere in the world, and blocking the Suez Canal was a big one, especially for energy, and oil rallied. It was clear, but you know they cleared the Suez Canal, and there hasn't been the break. So it's kind of interesting.
Fascinating stuff indeed. We can keep talking Texas tea again for the rest of the shows. A lot of stuff happening in energy, but Mr. Rhodes, where should we set our sights next in the ongoing journey, the movable feast that is TWIFO, sir?
Oh, goodness gracious. I don't want to take us to interest rates. I really don't. So let's take a look at, because I always do that. That's why I'm trying not to do it. Let's since silver had a drop, let's take a look at the metals.
I think we can do that. A little bit of the old metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, away to metals we go. You know where to find it, listeners. Go to the dropdown, cmegroup.com/TWIFO or /TWIO is where you go, of course, to begin your journey. Then you go to the dropdown. You choose the metals. You go precious. You go silver. Get you right to where we are right now. Coming into the start of the show, silver a little bit shy of the 25 handle, 24.91, off about 0.75%. This week and over since our last show, off about 1.3%. Again, not a huge move, but given the fact there's not a lot of dark side on the screen this week, listeners, it kind of stands out by comparison. In terms of where the action was, and it was a decently active week, about 26,000 contracts on the tape so far this week, listeners. Of that, 52.6%. So a whole bunch going up in the May contracts. I think we're going to hang our hat out there. That has, looks like about 26 days to go out here. The vol, if you're wondering out there, in the May silver contract, that has a whopping 27.79. So almost a 28 vol, up about a quarter of a point. And in terms of skew, we saw the puts last week, 2.5% cheap this week, about 3% cheap. So puts a little bit cheaper. Calls 1.9% rich this week, 2.6% rich. So calls a little bit more bid, puts a little bit cheaper out there, but no dramatic moves in either direction. We're not really seeing any real dramatic lean one way or the other here in the skew in this May contract, which again, is where 52% of the paper going up this week. And of that, even though I said 52% of the paper went up, the big trade was actually the 32 even calls going up here in July, a whopping 2,339 times. So close to 10% of the paper going up in this 132 call print out here. Then we go back to May and we get these 23 puts. That is the big trade out there in May, doing about 1,200 contracts so far. The big day Tuesday, about 700 going up on Tuesday, slightly opening. There's an opening downside puts here, kind of the order of the day, followed by the 33 calls. That's interesting. That's almost a strike kind of reminiscent of the old squeeze days. Maybe some folks, a lot of closing paper. So maybe some of the squeeze folks finally giving up the ghost here, because we saw closing action on Monday, Tuesday, and Wednesday all week here on the 33 calls. The double calls, that sounds like a bit of a squeezy strike. So maybe some folks finally getting the heck out of Dodge. Also worth noting, the 32s also trading, almost all closing there as well. It doesn't look like it lines up with any sort of verticals here. So it looks like it's just related upside paper. Maybe the upside folks finally getting the heck out of Dodge there in May. In silver, let's look really quickly any other weird prints out here. Looks like most of it is kind of what you'd expect, kind of right around here, puts and a little bit of upside calls. 32 strike, like I said, getting some action in June, of almost 1,000 going up in June. So there are some upside trades. Again, most of the closing. So maybe the folks have finally given up on the squeeze here in silver. Mr. Rhodes, what's been lighting up your tape out here in the land of silver, sir?
It's kind of I'm looking at the June and the July. The July actually. Did you say those were opening? That 3,200.
The 32 calls. The 32 calls were closing.
The 32 calls in July were closing, and
the 33s. All the upside was closing pretty much.
Oh my goodness gracious! Okay, I was looking at the way that the skew lines up, and it all of a sudden kind of widens out between June and July expiration. And so I was wondering if the squeeze guys are giving up on it happening on the near term, but they're going to regroup while half of us are on vacation in the summer, since we get to go places, and they're going to sneak up on us instead of telegraphing what they're doing for 48 hours before
actually,
the market opens.
I take that back. I just pulled up the July. The closing was in May. The July actually is opening. So you're right. They could be rolling.
Yeah, I could. That's and just the way the way the skew kind of lines up. It looks like that might have been what happened.
So perhaps I wrote off the squeeze too soon, sir.
Yes. No. They're just they learned a lesson. And this is the kind of lessons you learn if you're in one of my classes at Loyola. If you're going to try to organize a squeeze, you don't tell everybody you're getting ready to do it. And that's what they did for really all day Saturday and all day Sunday before the markets opened on that Sunday night. And silver ran up, but and everybody was waiting for that big limit up number. And then we all went back to watching Family Guy and The Simpsons because it didn't happen.
Yeah, kind of a rule number one. It's like Fight Club, right? You don't tell anybody about Fight Club. You don't tell anybody about the squeeze until it happens. But you're right. Maybe we did write it off a little bit too soon. Looks like they are rolling out to the July contract. So closing in the May contract, and perhaps so keeping some of that level alive, perhaps. Interesting stuff. 32 strike in silver at about a 25 right now. Listen, what are your thoughts? A bridge too far? Are you on board with the squeeze? You think there's another leg to go in this? Let us know what your thoughts are on silver. Let's keep on rolling, though. You don't get a chance to really talk FX at all on the show because not much lighting it up. So when I see something breaking into our movers and shakers, I kind of want to take advantage of it. So let's go out to a little bit of the old FX.
The dollar, the euro, the yen, and more. It's time to explore what's happening in major currency options around the world. It's time to talk FX.
All right, let's do it, listeners. We have the yen USD breaking into our dark side. They're off about almost 1.5%, and actually doing some paper. Had about 31,000 contracts on the tape coming into showtime, up to about 32,300 right now. So interesting stuff afoot out here. And again, we don't get to use that drop often enough, the FX drop. So we got to take advantage of it when we can. Come into showtime now. We're seeing that yen USD. If you're wondering, it's at a 0.0009044 for those of you who don't follow the yen USD. The strike's always a little bit funky and fun out here in FX land, but it's putting up some paper this week. In particular, it looks like the lion's share of the action coming 37, almost 38%. And looks like we've got this is a weekly that's going away in about 8 days. So that's doing about 38% of the paper. Then we go a little bit farther out. Let's see. Let's go out to the May contract. That has 35 days to go. And that has about 27% of the paper. So we can hang our hat out there as well. Let's parse a little bit. It's kind of hard to parse a contract with 8 days to go, even though there's a lot of action out there. Let's see what the vol is. FX category, one of the reasons it doesn't make on the show that often, not a lot of vol to be found out there in the FX. And coming into showtime now, looking at this May contract here in yen USD, the vol is a whopping 6.11, up exactly 0.01 out here this week. So not a huge vol moving and shaking week. Skew-wise, same deal. Even though got a little bit of action on the calls this week. The puts last week were literally even to the at the money. So there was no demonstrable put skew at all in this contract. This week, 1.5% cheap. So the puts coming in a little bit. The calls are where a little bit more action was. 2.4% rich last week. This week, nearly 5%, 4.7% rich. So calls coming on in here. Let's see what the size print was out here this week. It was in neither of those months. We're going to find the size print, nearly 3,000 contracts. It was actually in the June month, which did 13% of the paper this week. It was nearly 3,000, 2,800 of the 0.00985. Say that 5 times fast. Those were the calls that were lighting it up quite a bit out here this week. Actually, 0.0093. 0.0093 calls going up here. Almost all of that today. 2,739 contracts going up today. So a palooza going up out there today. The rest of the week, kind of light paper. So someone's got an axe to grind on the 0.0093 strike out here this week, which is kind of fascinating stuff in and of itself out here in June. Let's go a little bit farther and see if we can find other paper in the April contract that has about 8 days to go. It was the 0.0092 calls that were going up 1,938 times. The action, most of that today again as well. And yesterday, about 800 going up yesterday. Those were opening. Don't know what today's was, obviously, but looks like some interesting paper there afoot. Opening now and also opening out there in June. That's interesting paper. Again, these strikes are, I think, sometimes hard for some of our listeners who don't trade the FX to really wrap their heads around quite a bit. I'm looking for any interesting and or aberrant paper out here. It seems like it's just pretty strong across the board, Liz. I don't see any demonstrable trends out here. Mr. Rhodes, I don't know if you watch FX too often, let alone the yen USD, but it is rare that it pops up on our movers and shakers. Any thoughts here on either the yen USD or FX in general, sir?
I wish I had said FedEx before I said FedEx. Goodness gracious, there's my Memphis coming out. FX before I said metals, because the yen is a quandary in a Pandora's box, I guess. It looks like the paper is choosing both directions, or they're trading their Elliott waves, and they see a down wave, then an up wave, and a down wave, and an up wave. I assumed when it showed up as a on the list of top 5 that there must be something going on and there'd be a demonstrable trend that we'd be able to gather from the option activity. And normally you can. I think it's why even if you don't trade options, you should at least pay attention to what's going on in the market. But this one's just a lot of activity in both directions, which let's just say that maybe it's going to break in one direction or the other. And 2 or 3 weeks from now, we'll be looking back and saying, see, should have been watching the options. But that doesn't really help anybody when I can't tell you what direction I think it's going to break.
Yeah, it's a rare one. Usually when something like that breaks into our movers and shakers, there's some bias somewhere, right? And yet there's not really anything right now this week. Just a lot of paper across the board. So folks are really active in yen USD. That'll make our FX heads excited because it made it on the show. Maybe you have some insight to what's going on out there in yen USD. Hit us up, listeners. And speaking of listeners, it's time for you folks to join us on the show. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody. Welcome to the Futures Options Feedback. You folks know how to get at us at Options on most of the major social media platforms. Questions at theoptionsinsider.com. Also works if you're joining us live. We like to bump you folks up to the top of the list. You can hit us up in that Mixlr live chat there as well. Let's kick it off. We got a couple of related questions going back to small cap land. First up, we got a question from LTM. He wants to know, does the small delta call buying in RUT also make it attractive for vertical spread traders? And then a related question from Nancy wants to know, did the recent small cap sell-off change the dynamics of the options trading at all? So a lot of people were asking last week, this question is very similar from Nancy this week. Are the calls still trading? Are they still active out there in Russell 2000? We kind of answered it earlier in the show, but the answer is yes. The 24 half calls, about 200 points, a little bit more than that out of the money out there in June, are still active, doing a good chunk of paper this week. So upside calls are still trading here in the Russell 2000. Going back to the skew question, Russell, you were just talking about the skew on one of your recent videos there. What are your thoughts on all this small delta call buying in the Russell 2000? Does it make it more attractive for vertical spread traders, sir?
I think it does. And we've seen, it's not so much that there's this huge extra opportunity, but I think you've got the ability to go farther out and still be able to pick up some premium if you don't think that we're going to get a big, 3, 4, 5% rally over a few week period out of the Russell 2000. And strikes are more active right now that maybe weren't as active in quieter volatility times. You can always do well in the opposite direction as far as finding volume, finding liquidity, and being able to sell a 3, 4, 5% out of the money put spread. But the same sort of opportunity is here right now with this elevated skew on the call side and just the overall elevated implied volatility of RUT options. If you've got a directional, even better, if you think we're going to stall out in April or something like that, and you've got a handful of different broad-based indexes to choose among, the RUT's probably going to give you the best. The RUT complex will probably give you the best opportunity to trade something like that right now.
Yes, well said. I mean, these types of dislocations like we see in the skew, people bidding up small delta calls, it does make things like verticals usually more attractive because you can get into them for much lower prices because folks are being nice and kind to you and bidding up the far end of the call wing out there. So if you are so inclined, if you are bullish on something like the Russell 2000 and those calls are still trading 2450s and stuff out there, then it does make those verticals look a little bit more attractive. Mr. Sean, anything to add here for our questions from LTM and from Nancy?
I think you guys did a great job answering LTM's question, and Nancy's. I'm going to just focus on Nancy's question. Did the recent small cap sell-off change the dynamics of the options trading at all? And I have to say, it hasn't, right? It's upside calls have stayed bid. They continue to trade. You mentioned the 24.5s today, trading in size. So, Nancy, to answer your question, vol has been bid and remains bid. It's come in with this last of this rally that we're seeing. Again, I think vol and the spread between VIX and RVX has tightened as well. But for the most part, options trading activity continues. Volatility is still pretty high, just under 30, right? So I just wanted to just expound a little bit on Nancy's question there, if that's okay.
Have at it, sir. Let's go on up to this question now from the creatively named ZZXNNT3. Say that one 5 times fast. He wants to know, why no lumber on TWIFO? Seems like it's moving a lot and very volatile. Yes, you are correct. I kind of say this every week. Maybe you're new, ZZXNNT. Lumber on just sheer volatility alone would qualify. Unfortunately, the options paper doesn't measure up to the level we would need to parse it. But you don't believe me, I will break it down for you right now here, ZZXNNT3. As of right now, there are a whopping 159 contracts on the tape out there in lumber. Same reason why we're not breaking down Bitcoin right now. It's up 14, almost 15%. There's about almost the exact same number of paper, about 180 contracts out there in Bitcoin. Even though that probably will be changing now. We got some smaller contracts on the horizon. But lumber, unfortunately, for whatever reason, I'm with you. It's 1,013 right now. It's a very beefy contract to be exhibiting these types of swings. Moved 6.3% just this week. The vol is at about a 53. It has all the makings of an attractive option product, yet for whatever reason, most of the volume on the futures is on the end user type side, and they don't see the need to use the options. The futures are filling their need right now, so they're not using them. And the retail folks, I think lumber is still maybe a little bit of an intimidating product for them, so they haven't really flocked in to drive some of that small lot option paper out there. So for whatever reason, 159 contracts, what we got up there in lumber right now, Mr. ZZ. So probably could analyze it every week. That's much volatility there is. It's on our movers and shakers almost every week. It's like nat gas. But nat gas is $3. Lumber is $1,000. So it's much more impressive from that perspective, and yet it's just nothing to analyze. I wish we could. All right, next up here, let's see. Still Living. Still Living's got a product request. Still Living wants to know, hopefully glad you're still living because they can still listen to the show. Still Living. He says, can you break down corn on the next episode of TWIFO? Thank you very much for the program and all that you do for options traders. Well, you're welcome, Mr. or Mrs. Still Living. We can do that. See, ask and you shall receive. We're very nice here on the show. If you want to find corn, listeners, go to that drop down, go to the ag complex, go to grains and oil seeds. You'll find corn there at the top of the heap. I like to hit select all. It's up to you. If you do that, you'll see whopping 693,000 contracts on the tape this week. So corn, no slouch out there this week. Just net movement wise, only up 1.18%. So not going to break into our movers and shakers this week, but a decent week. Corn right now, by the way, at 559 even in that front future there. In terms of where the action was this week, it was in, it was in the May contract doing almost exactly a third, about 33% of the paper this week. That contract has about 22 days to go, so it's a good frame of reference for us to analyze out here. Corn vol, decently rich, 30.5, even though it's off about 3.3 points this week. So it's coming in it was over 33 last week, now about 30.5. So it's a decent amount of vol on the tape for corn this week. In terms of skew, puts 3.9% cheap last week. This week, 4.6% cheap. So puts getting a little bit cheaper. Calls were, they've come in quite a bit. The calls were 11.7% rich last week. This week, 1.5%. So the calls have gotten clipped quite a bit. Let's see what's trading out there. It looks like, the big print out here this week was the 600 calls out here in May. So I'm going to guess that they probably sold those, but let's see. Let's dig in a little bit. 32,662 of those bad boys on the tape. 15,000 of that's almost half going up today, listeners. 11,000 yesterday. That was actually slightly opening. and then 3,500 on Tuesday, 2,500 on Monday. So corn's pretty active. These 600s doing a lot of paper. Looks like they kind of clipped these because that call wing came in pretty aggressively. Also had the 580s doing about 15,000 contracts. Again, about 5,000 today. So today, the most active day. So decent paper on the tape today for corn calls. And then let's see what else is lighting up out here. Also, the 370 puts. So again, we're at about a 560 right now, listeners, 559. The 370 puts in DEES doing about 28,000 contracts as well. So that's our clear number 2. And they did, of that 28,000, 21,000 almost going up yesterday. Half of that closing. So a lot of paper coming off and closing on the 370 put strike in DEES yesterday. And then about 5,000 on Tuesday, 1,500 today. Let's do a quick glance at DEES as well, because that's a lot of paper going up out there. The vol in DEES is at about 2880. That's off about half a point. The skew out there in DEES, 4.1% cheap were the puts last week, 11.3% cheap were the puts this week. So obviously they were unloading some of those 370 puts out there, listeners. And 9.5% rich were the calls, about 4% rich this week. So interesting stuff afoot for corn. To hold on to some of these epic questions you guys have. We're just running out of time, but great questions. You folks ask and you shall receive. We're nice here on the TWIFO program. All right, that music, unfortunately, means we've come to the end of another epic sojourn through the world of futures options. We hit it all today. We hit energy, we hit FX, we hit equities, we hit even a little bit of ags out there. You got even asked for lumber. You got a lumber breakdown, all 190 contracts or whatever it was out there. So never let it be said that we deny you the products you want to hear on TWIFO. But before we go, let's go around the horn. Let's start with you, Mr. Rhodes. If folks are intrigued, maybe want to check out your videos or maybe a book or maybe want to take a class at Loyola, where should they go? What should they do?
Oh my gosh, there's different place for every single one of those things. Probably the best place is just the EQDerivatives.com.
We're losing you a little bit there. So yeah, head over. You back?
I'm back.
Oh, there you go.
Can you hear me?
Yeah, I hear you now.
Yeah, the music got a little loud there.
The music. I turned into an old man and was covering up my ears. That's when the music got so loud. Turn it down.
That was our producer's revenge for you. You talking about Loyola earlier.
Yeah, well, I was just basically saying, EQDerivatives.com is the best place to find me and what I do. If you put the /research after that, that goes to the work that I do for EQ Derivatives.
There you go. Also give him a follow on the old Twitters. He is at Russell Rhoads. Don't forget, there's legion of S's in that. He spells it a little bit differently, RHOADS. And Mr. Sean, if folks are intrigued, and clearly they are by all things small caps, where should they go? What should they do?
Well, first of all, it's just I have to thank Russell Rhoads for being on the show. He's just a fantastic partner, and I couldn't say enough about him. About EQ Derivatives and their work. It's just so impressive and so full of information that I strongly recommend all the listeners to go to EQDerivatives.com and check out and /research, check out Russell's stuff. It's all fantastic. He does an amazing job, and it's just a pleasure to work with him. So thank you, Russell, number one. And number two, Sean.Smith@lseg.com. Happy to answer your questions. FTSERussell.com is the website to find out all the information you want in regards to our FTSE Russell suite of products. It's a fantastic website. Mark, thanks for having me on the show today.
Happy to have you on, sir. You need folks know where to go to get these TWIFO reports. Check out everything else that's moving and shaking over there at CME. CMEgroup.com /TWIFO or /TWIO is a place to go to begin your futures options journey. Of course, you can branch out from there. Look at the research that Blue and Eric and the team over there are doing. A lot of great education, everything else over there. But begin your journey, CMEgroup.com /TWIFO or /TWIO. On behalf of everybody over there in CME land and Sean, everybody at FTSE land and Mr. Rhodes, and indeed myself, I thank all of you out there for downloading, streaming, and subscribing. Unfortunately, this brings to a conclusion our broadcast week here on the network. No shows tomorrow because all the markets are closed, so no vol views. Hopefully you got enough of a taste of volatility on the show today to make up for it. We tried to fill that need for you. But we'll be back again on Monday with the option block, kicking it all off all the way through to Thursday. Another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.